Hello and welcome to Crypto Weeklies. In this video, we are going to cover Sandbox and its token Sand and conduct some of the price target accumulation strategies as well as social sentiment in the crypto. None of the content is financial advice. We have this website cryptoweekly.com where all our machine learning based price forecasts for top 100 cryptos and some of the exotic cryptos are available. Some of the retirement models, regression analysis and accumulation strategy. None of the content, as I mentioned earlier, is financial advice, and this is not the first time we are covering Sandbox on our channel. You can see that at least this is one, two, three, four videos on the channel over the course of the bear market. And again, now that the market is picking up again, we wanted to provide an update on it. Over the last 24 hours, Sand has rallied by about 24%. Over the last 7 days, about 46%. Market cap above 1.23 billion. Circulating supply 2.39 billion. Total supply about 3 billion. And in terms of volume to market cap ratio, it's under 220%. So that means there has been the volume far exceeds that market cap. Again, over here the 24-hour volume is 2.75 billion, market cap 1.23 billion. You can check that this is a healthy volume, and if this volume sustains, what could be a theoretical ceiling for Sand. Again, that information is available on this website, cryptoweeklies.com. Again, this is just getting updated. Again, this is the machine learning based price forecast. This is our latest model for Sand, and the weekly price of Sand in this white line. And again, based on this weekly price, the trend based model is this pink line based on machine learning techniques such as ARIMA, LSTM and XGBoost. The theoretical trend based forecast for Sand is between 39 cents to about 54 cents. The current price is at around 51 cents. Again, this is more impactful to identify the directionality of the model, not the actual price forecast. Again, the shape of this trend line is a guide to the directionality, so devoid of any bearish or bullish narratives or price action. The fair value is an ever increasing pink line. The bull case for Sand is between 47 cents till about $1.89 between now and end of April 2025, and this is a 1 standard deviation non-euphoria bull case. In a euphoria environment, this 2 standard deviation or a 95 percentile bull case makes the most sense to look at. Especially you can see over here, this orange line over here is an estimation of what Sand did towards the end of the halving year of the last market cycle during December of 2020 till about April of 2021. 4 years later, this puts Sand somewhere between 55 cents till about $5.74. The previous all-time high for Sand was at around $6.57. So again, this model estimates price action only till the end of next 6 months. So that's the extent of this forecast. And in a case of a bearish pullback, the theoretical support is between 12 cents and about 33 cents. Again, the reason that the bear case scenario is lower than the previous bear market bottom is because Sand over the course of the bear market did put a several series of lower highs and lower lows, but again there was a series of bottoming pattern at around 25 cents all through August 2024 till as late as about November 2024. So again, to summarize everything, the bull case at a 2 standard deviation or 95 percentile euphoria case for Sand is between 55 cents till $5.54. Again, that's a 10x from current level. Again, none of the content financial advice, and you can see those tabular week by week tabular 2 standard deviation forecast on this bull case at 95 percentile. This is the column, and if the rally kind of has a muted phase, then this in the 68 percentile bull case at 1 standard deviation confidence makes the most sense. Again, the 3 columns to watch for is the base case, the bull case at 68% and 95%. Again, that's the phase that historically speaking per the last market cycle, that's where crypto is at this point in time. You can check this out. Again, all of the content available for free. You don't have to sign up or pay for anything or face some irritating ads on the platform. So it's all no ads, no no price and no Again, no subscription or sign-ups needed. So this is we covered the machine learning based price forecast. Now we'll spend some time in the three models, and also at the end we have an estimation of these three models to provide an estimated price in a bull case. So the first model is the simple moving average price model. This is price color coded based on the risk level offered by SAND based on how it's performing with respect to its 20-week simple moving average. You can see that these risk levels do a decent job to identify both the tops as well as the bottoms. Over here you can see, if your hypothesis is any price action above, let's say 60% risk is very close to that eventual peak, then you can see that these areas over here where that's where the price was too far gone from the 20-week moving average and highlighted a peaking scenario. And the opposite of that is if you have this hypothesis that whenever the risk level are less than 20%, that's when accumulating sand makes the most sense. Again, this provides a range where we can say that DCAing at that point in time is not harmful, because you are essentially avoiding some of the overvalued phases over here which are grayed out. Right now the risk levels are, I think, at around less than 30%. Again, slightly higher than 20% threshold, but again not as high as some of the riskier price action. And you can again extrapolate this risk based behavior to identify what could be a 20-week moving average based top. Right now the price of sand is around 51 cents. That represents somewhere risk between 0% and 5%. Risks are never zero, these are estimated to be zero. In terms of the lofty, so some of the moderate targets based on this 20-week moving average based forecast is between $4.58 and $6.38. So that's the moderate range of the targets. So some of the higher or the outlandish forecast, one might say, is between 0.9 risk and 1 risk. That is too close to identify as a top, because again the time spent at those higher risk levels, you can see it's 1 day or less than a one week at times. So again, that range is between $6.73 and $7.45. So just to summarize, price action between $4.58 and $6.38. That's the moderate to high range of forecast for sand per the 20-week moving average model. The second model that we'll be discussing for sand is the dollar cost average model. This is again based on regression based polynomial regression based valuation, where the price goes up or the fair value goes up in the bull market and goes down in the bear market based on the proportional and time adjusted distance between the price and this polynomial regression line. That's how the risk colors are assigned and are again normalized between 0 and 1. Again, the same idea. This model does a better job in identifying the bottoms than the top. You can see over here, these are the grayed out. Again, I will make a better estimation of this. Again, over here, this is all of the price action based on and the grayed out regions are the whenever the price is offering a risk level higher than 20%. Right now, again, you can see over here. And also, if you have even more risk threshold, this model identifies whenever the risks are less than 10%. Again, not too long ago, November 15th, price at around 30 cents represent a risk level of around 11%, rounded off to 10%. Right now the risk level per this model is somewhere between 20 to 30% risk per the SMA model. And this is a more conservative estimation of what peaking scenarios are for, or topping scenarios for in the short term for sand are between 64 cents. That's when the risk levels are getting somewhat of towards the higher end of the risk levels, color code shifting from green to red between 64 cents and about $1.05. This is a very conservative estimate of a short term peaking scenario for sand. In terms of some of the higher end of this forecast is between $1.11 and $1.22. That's where sand is on this DCA model. The last but not the least is the time weighted average price model. This model provides a range based on how much time a particular crypto has spent below or at key price action. So time weighted average price, the time weighted average price line is this blue line, and the findings per this model is whenever the price is below this blue line, that's when the dollar cost average as over a multiple years or during the bear market makes the most sense. Again, the purpose of this model is avoiding buying the dip whenever the market uh, cools off but has not cooled off as much as it's close to eventual market cycle bottom. Again, the tendency of an investor is looking at some of the shorter term crashes and going all in a dip where it's not the local minima or global minima. This particular model helps identify if the price has gone down enough in the bear market to kind of warrant some attention with respect to the time weighted average price based accumulation. The time weighted average price for sand is at around 91 cents, so substantial time has been spent in the bull rally above 91 cents to justify that DCing below 91 cents for sand makes sense, provided sand does eventually make a new all-time high. So this is, again, per this model, the risks are rounded off to zero because the price is below the time weighted average price. So just an estimation of all the models we have over here is the time weighted is the estimated bull run target. Before we summarize that, we'll definitely spend some time to analyze what is the overall risk in the market. At around 47% moderate risk environment, we are in that environment where the risks are again not as low as they were back in 2022 and 2023, where the risk levels, again, this is normalized between 0 and 1, and this is all of the top 100 cryptos by market cap, how they are faring on their risk based journey using factors such as volatility, alpha, beta, risk adjusted returns, and percent drawdown. So a 47% completion of the bull market, one might say, based on this assumption, and again, as the risks are not as low as this territory but also not as high as they were back in April 2021 and November 2021. This offers a moderate risk environment. Over here you can see quite similar to March of 2021, also December 2021 and April 2022, and also a couple of days we spent in 2024 in March, and now again towards the end of November of 2024 as well. So that's where the market is in terms of the narratives which are gaining some of the traction. Again, Bitcoin, some of the top popular L1s such as Sui, Solana, Hedera, Cardano, the bullish sentiment, XRP. Those are some of the narratives, and also some of the regulation related news. So this is the state of the market in terms of one word cloud. This gets updated every day and looks at social media content related to crypto on YouTube and X. So this provides a single snapshot. Again, all of this content is available for all. In terms of the total overall sentiment is normalized, is at around 50%. There are a lot of bullish narratives, but again, over the last 24 hours, some bearish narratives. It's a 50-50 at this point in time. And now that we have covered the social sentiment side of things, we'll continue with the estimated bull target for sand, the last model that we have over here. The latest price at around 60 cents, and that's when the models were updated. Again, today there was a brief time where the price was at around 66 cents. The regression risk, that the DCA model that we covered, at around 20% time weighted average price risk, because the price is below the time weighted average price, the risk is 0. SMA risk at 23%, weighted risk at around 14%. Based on the expected value, based on the risk and reward, the bull run peak estimated is at around $4.11, and that represents a reward of about 7x from the current price of about 60 cents. So with this, I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel, also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.